A16Z Crypto is arguing that the word stablecoin no longer captures what dollar-linked tokens are becoming. In the stablecoin's outdated term story, the pressure point is simple. The naming debate matters because the category is shifting from volatility protection to payment infrastructure and programmable money. The global stablecoin market has grown above $321 billion, and institutions are now looking at the technology for faster payments. The viewer should not treat the number alone as the whole story, because the useful part is who is exposed, what mechanism created the pressure, and which signal shows whether the issue moves from claim to follow-through. The opening read is therefore narrow and concrete. $321 billion market sets the scale, while product wording tells us what would make the next stage visible. That framing keeps stablecoin label tied to evidence instead of excitement. Stablecoins were first named for what they solved: keeping value steady in a volatile crypto market. The argument now is that stability has become a baseline requirement, while the next question is what builders can do with it. That baseline matters because it gives the story a factual floor before any reaction builds around it. The strongest confirmed scale marker is $321 billion market, while name may linger adds the context that keeps the event from becoming a vague market talking point. It also explains why A16Z Crypto is central to the case rather than background noise, and why the timeline or structure cannot be skipped. Without that baseline, $321 billion market can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Stablecoin's outdated term turns on the mechanism. The technology can move from a crypto trading tool into payment, settlement, and on-chain financial infrastructure. When a dollar token becomes a rail, the peg is only the starting point. The useful part is how money moves and integrates. That is where a surface event becomes more than a headline. The mechanism explains whether the pressure sits in liquidity, compliance, custody, user access, product design, security, or market structure. In practical terms, the link between naming shift and payment rails is what makes the outcome matter beyond a single announcement or price move. That is the piece viewers can actually monitor. The affected side is payment builders. Banks, payment firms, DeFi builders, and users may talk less about coins and more about digital dollars or on-chain cash. This is the practical consequence. The event can change how people use a platform, how traders read a level, how issuers design products, or how regulators evaluate a risk. The segment keeps that effect narrow because unsupported ecosystem-wide claims would blur the evidence and make the story less useful. The useful question is what payment builders can actually do or observe after this event. The consequence is concrete only where that group is involved. The unresolved piece is whether the term will fade or stay like older technology labels that outlived their original meaning. That does not erase the confirmed facts, but it does limit how far the conclusion can go. Product language from banks, wallets, and payment companies will show whether a rebrand is actually happening. This is the difference between a strong signal and a completed outcome. Viewers should know which part is established and which part still needs proof. The missing evidence matters because product wording can change the interpretation without changing the baseline facts already on the table. That caution matters while the open item remains unsettled. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether new products use stablecoin language or digital cash language. For stablecoin's outdated term, that matters because names can shape how regulators, banks, and mainstream users understand the category. If that signal appears, the story can move into its next phase. If it does not, the event remains important but unfinished. The clean way to follow it is to track that trigger, not to assume the ending before the evidence arrives. The final readout is intentionally specific. Product wording is the point where follow-through can be judged. Everything else is context until that signal changes.